Hey guys, if you like the idea of trading without discretion and you like the idea of potentially just using indicators to get that entry signal to get involved in the trade, this video is probably for you. So this combines my order block strategy along with the use of stochastics and moving averages. Now it's just used for lazy trading. I tend to use it for scalping the Asian session and it's really simple. I've combined somebody else's strategy with my own to make this work. Now, you guys be the judge. If you like it at any point, please do give it a thumbs up and subscribe, and you will be able to see the rest of my content as it comes out. Cheers. Right then, so how did I improve that engulfing candle strategy, which I created probably over the last couple of years and just kind of refined it recently? Well, what I noticed is that there's so many potential sort of like last candles or order blocks or whatever. There's so many of those available that I needed to start filtering down the losses. Okay, now there were a lot of losses, but there were a lot of wins. And when you're having a winning day and you go straight into a trend, amazing, no, absolutely amazing. But there are some days where you'd have 2 or 3 losses in a row, and then you'd have 2 or 3 days of 2 or 3 losses in a row, and it starts to really hit your account. And it more so than your account, it actually starts to hit your morale. And what I wanted to do was to try to improve on that strategy by having a few, I hate to say this, but indicators to try to just make it less stressful. Because when you're doubting yourself, when you're getting a series of losses and you start doubting yourself, you think like, surely there's like, you know, am I right, am I wrong? Like there's got to be a way to be able to give myself like a second pair of eyes. So I thought, what indicators can I use to make this strategy a little bit better? How do I get less losses? I don't mind if I get less wins, as long as I get less losses. You know, I might not make the sort of 20 or 30% winning days. I'm going to show you one in a second, but it doesn't happen all the time. And there's a few confluences which I look for with these things. So I'm just going to list them here quickly, and I'll get rid of this before we get stuck in. But the things which I look for are the indicators, first of all. So we're going to use an EMA 200. Okay, and I'll talk you through this in a second. We're going to use a stochastic. Now, I'd never used stochastics before, but I did come across a video where it showed what looked like the Holy Grail. I will tag the video as well. Turned out it wasn't, but I did modify that strategy and combined it with this, and it worked well. So you've got the EMA, you've got stochastics. You use the volume, use market structure, and of course we use order blocks, my version, just to make that clear. So we've got those, and what else do we use? Just to make it very clear, we're actually looking at the Asian hours, so overnight in Asia, so it's the Asian session. Knew I'd get there. And we can either use GU, which is GBP USD, or we can use EU, which is Euro USD. Okay, now the reason why I say GU or EU is that I've backtested it on them. It could work on every pair. It could work on gold, it could work on anything, but I don't know. Okay, I've only backtested it on GU and EU. We're going to look at EU today, and we're also, this works, typical pool fashion, it's the 1 minute chart, it's scalping, okay? And on that, we're using a 3 pip stop, and we are also using most recent swing for our stop losses. Other people, you can do, you know, a 2 to 1 or a 3 to 1, and trust me, you will get so many more wins than what I do, but you won't get the massive wins which I get, which they'll come around every 10 or 11 days. You'll get over 10% in a night, and you'll think, oh wow, that was a good session, especially if you can keep on top of it. Now, because we're using the 1 minute and it is scalping, you do need to think fast, and you need to not hesitate. Now, anybody who follows me on Instagram, which is Real Paul McGee, you'll know that back in February, March time, when I was using this strategy, I went through a bit of a psychological hurdle where I was hesitating on taking my trades because of a series of losses, and the ones which I didn't take went off to be the massive winners, and the ones which I decided to take were all the bloody losers. Okay, now you want to learn this strategy inside out and just not hesitate, just get stuck in and do it. Go back and backtest as far as TradingView will allow you to do it on the 1 minute. I think it allows you to go back about 2.5 months, so you get a good sort of, I don't know, 50 trading days. Go back, do the back testing, see what works, and take all of the trades, take all of them, and then look at the ones which have won. Okay, so with your back testing, look at the ones which have won. What do the ones which you've won have in common? Okay, then go back and back test all again with a slightly different set of rules for the ones which have won. Then create yourself like a winner's library. There's a few places which have recommended that to me, so I started doing that. So you know exactly what it is that you're looking for. Every time you see it on the chart, it's just second nature then, you just get involved. So let's get started putting these indicators on the chart. Now, you'll know me, I don't usually use indicators. I am usually a naked trader, apart from I'm not taking off my clothes. Might edit that out. But I prefer naked price action. Alright, but I wanted something, especially when it was overnight in the Asian session. I was knackered. I'd already worked throughout the day. I'd probably traded throughout the day. I had a lot on in my personal life, and quite frankly, I just wanted to rely on the indicators a little bit, just to say, yeah, should I get involved or not? There's my excuse. It's literally tiredness and laziness. Alright, so let's get started. Indicators. Let's see which ones I've got here first. Right, the Asian session you don't need to have on your chart, and I will show you just temporarily which one I use. So I've been asked this a few times. I'll try to tag somebody in where you've asked for which Asian session indicator I use, and just to show exactly which one it is, I'll go to the source code bit, and it is the FXN-Asian session range indicator. So if you go up to indicators and you type in FXN-AS Asian session range, it is this one by Rob Minty. Okay, now what you'll get with that is the style. Okay, so we'll go into inputs in a second, but all what we want to see at the moment is the Asian session background color. And my indicator, because I have a pure black background, I wanted it in yellow so I could just about see it, and at 12%. Now if I turn this on, there it is. That's how it looks. Not pretty, but it works. Now inputs. For the Asian session start hour is 20 and the end session hour is 02, and we are okay. Now you can turn that on and fantastic. What else do we want? We want the volume indicator, and the reason for that, just so you guys know, let's make this really, really simple. Okay, now a lot of people say, what time should I start doing this trading? Why is it 1 o'clock now, whereas earlier in the year it was midnight? Well, the reason for that is the end of spread hours and the start of the Asian session. Okay, so at the moment the spread hours are roughly between, you can work it out just by looking at this, the spread hours on this pair are pretty much between 10 o'clock and midnight. And the reason which I can spot that is if you look over here on the top left, on the volume section, you can see there's a little number next to it. Okay, so on these green ones, it's 320, 300, 244, etc. Over here, there's a big red spike, which is 750, very manufactured if you ask me. What happened? Oh yeah, there was like a no movement, very manufactured. But essentially, during the spread hours, there's hardly any volume going into the market. And to be fair, this volume indicator, because it's Forex, it's only about 90% accurate. It's not spot on, and it will vary based on what the broker is. So this is using FXCM. If you had Oanda, if you had Forex.com, it would all be slightly different. But just to help people, if like you'll use it maybe once every 2 or 3 days for an absurd move. So a move like this, you'd be like, whoa, what was the volume which went in here? 3. It's like the brokers are there to screw you, right? But sometimes you'll use the volume indicator, but in reality you don't need to. It's just to confirm for yourself whether or not you've got the Asian range correct and your time zone. Okay, so that's just to help you out there. The time zone, we can see that it's the Asian range, happy days, and all what you spot really is very little volume, like 13, 18, 16, 2, etc. Then all of a sudden 1 o'clock comes, 58, 64, you know, there's just a clear increase. So we've got the volume. I'm going to hide that again because it just irritates me. What else was it that we needed? We needed our stochastic. Now, I'd never used stochastics before, and this was originally brought to my attention by a girl, I think called Christina Forex. I'll tag her or show the thumbnail or something. And she found what I thought was potentially the holy grail of laziness in trading. That came across rude, that wasn't meant to be, but I thought, awesome, I want some of that. I back tested it and it didn't work for me. But I did notice that there were stints where it would win sort of like 4 or 5 trades in a row, but then it would lose like 7 or 8 in a row. So when I actually put it into a spreadsheet and I went back over 50 odd days worth of data, I realized that the time where it was winning was during the Asian session. Okay, so it was winning during the Asian session, but it wasn't winning during Europe, London and New York. So I thought, okay, this might be an Asian strategy, and if I combine that with my order block strategy, we might have something really decent. So that's what I've done. Okay, so thanks to the thought process of Christina, she made it up herself. Incredible, great job. If it's somebody else's strategy, thank you. You know, but what we're going to do is we're going to change this. So the standard settings are 14, 1 and 3. I'm not going to pretend that I know what they are because I don't, but we're just going to go in, we're going to change them to exactly what she mentioned, which is 5, 3 and 3. Okay, now all what that's done, just to simplify things for you, is that imagine this like an RSI. You've got markings here which are 80 and 20, so that's like the upper and lower end of the RSI band, and you've got the, I think they're called the D and the K. Yeah, the D and the K bands, I guess. What you want is for them both to break out above the 80 and then close back in to the 80. That was one of my modifications. So what we're doing is we're waiting for price to work its way down and then both of them to break out. Okay, now breaking out isn't the indicator to start reversing, it's once it closes back in. That's when I say get involved, because if you get involved, let's say for example here, like to be fair, this looks good, but quite often you could have a candle which looks good, but the stochastic indicates that it's not a good entry. But sometimes the stochastic will show that it's a good entry, but the candle will look completely the opposite of a good entry candle. It's very, very strange, but the stochastic tended to work better if I waited for price to come out above the 80 and close back in below 80, or below 20 and then close back in within 20. And you've got to wait for both of these bands to be outside of the 80 or the 20 together at some point. So you've got that. Okay, so very simplistic. When price is above 80, typically speaking, what you have is it's telling you that price is likely overstretched, it's overbought, it's likely going to start collapsing on itself and it's going to start going down. Now when price is down here, or when the bands are below 20, it's indicating that, you know, the elastic band is going to be pinged back up and let go from the bottom part, price is going to shoot back up. Okay, now what we're doing is we're actually going to be adding another indicator just to try and help us out, and it's a moving average. Alright, so just type in EMA and go to, I don't know, any of them, that one perhaps. Oh, there we go, it's given us three EMAs. Oh, what am I doing? Now let's go to the settings, because it's given us 3, we don't want 3, we only want the 200. Okay, now I'll do a video on EMAs and SMAs and stuff in the future, I'm sure, but we just want a general direction. Okay, sometimes it's hard to spot a general direction, sometimes you get confused with where's the high, where's the low, which direction is the market truly going in. Just stick on a 200 EMA, the professionals do it, banks do it, it's bloody easy. 200 EMA, that's all what you need. Alright, so we're going to put the 200 EMA on there. Generally speaking, just to let you know, is that if price is above the 200 EMA, we can look to buy the market. If it is below the 200 EMA, we're looking to short the market. Also, the stochastic and the EMA work together, okay? So with the stochastic, if we are above the 200 EMA, we want price to be coming from below 20 and closing back into 20. So that's indicating that price has worked its way down and it's run out of steam. It now wants to shoot up. And because we're above the 200 EMA, that's indicating that price is going to be going up anyway. So it's just like a double confirmation. If we can get a rejection off of the 200, amazing. When trading this as well, just to give you a bit of a pointer from a psychological perspective, if you're looking to get involved in a trade, or if you are currently in a trade and it's winning, I tend not to look at the candles so much. I tend to look at the stochastic. I will go like this. I will shrink my chart down and I will just watch the stochastic, because the stochastic basically indicates as and when I can get involved in a new trade. All right, it's as simple as that. But I will show you how that works. What else do we have? We have market structure and order blocks. Okay, so we're looking for like a relatively flat period of the moving average from the end of the New York session. So that's relatively flat. It was coming up throughout the New York session. Strong trend up, then we started to smooth out, then price broke structure, and then it's just gone sideways throughout spread hours, which is fairly common. And what we're doing is we're looking for breaks of structure and movements into my order blocks. And our entries, we're going to have a 3 pip stop, and we're going to use the most recent swing as our stop loss. Alright, so let's just get stuck in. Let's work our way up. Sometimes I will use, just to indicate to you as well, sometimes I'll use a horizontal ray like this, or it will be a longer one like that, just to indicate to myself where basic market structure is, which I want to see before I can lock in profits. Or other times it's just to show that I want to see a break of an area. Now, I'm not going to use these just yet, but I will later on in the session, because it starts to get a bit choppy. And you guys need to know where I decide, like, right, I'm either going to take my wins or I'm just going to lock in profit as close as I can. All right, so let's get going. What is it we're looking for? Okay, so we're looking at a bounce off market structure. We want to see where any of the order blocks are going to be. Now, in my order block video, which I'll tag somewhere, we will see that this section here is essentially a block of orders. All right, really simple. It's just really, really choppy. There's a ton of orders, not many, because you look at the volume, there's not much volume, but essentially once price breaks out of this area, it could be quite explosive. Yes, it's only a handful of pips, it's probably 5 pips or whatever, but as soon as you got a break from this area with this candle, price took off, didn't it? So you've got a good structure there of blocked orders. Okay, it's an order block as far as I see it. We're looking for price to go up and come back down and touch it. Now, what we are looking at, sorry, I've got to keep this open, by the way. I'm going to get rid of the Asian range just to make it nice and clean on the chart for you. And I will also change that EMA to a different color because orange just annoys me. So we want to make sure that we're heading in the right direction. We're looking for a retest of this area. We want to see a rejection candle if we can. So it'd be an engulfing candle, it would be a pin bar. And again, if you guys haven't checked out some of my videos, a beautiful pin bar would be something like this to get short on. And I'd want that to be like that as a rejection to go short. A rejection off the 200, off of a order block, something like that. And I'd look to get short from something like that. So we want to see a pin bar or some sort of rejection candle, okay? Now, we've got our order block, we've got price coming down, we've hit the 200, but what's happening with the stochastic, okay? We want to see price break below the 20, don't we? So looking at the numbers over here, where we've got, at the moment it says 48 and 28, next one 75, 51, we're looking for price down here, 26, 26, it's both working down towards below 20, 9 and 21, so we're nearly there, we've got one of them out. We've got the next one out, which is 6 and 13, so at the end of that candle, it's this blue one. Let me zoom in. It's this blue one here. Let me get a it's that blue candle right there. But what we want is the next candle to be above 20. So we want to be getting involved right there on the close of that candle, because price has come back in within the bands, okay? So there, 16, there, it's at the end of that candle. So we had an engulfing candle, we had a continuation, and then we had a very strong candle with very little wicks on either side. Good move. The stochastic was one of our confluences. You know, it went from below 20 to within 20, so above 20, and we're within the Asian range and so on and so forth. So we're going to keep on going. We're just going to work our way up. And this is where I'm going to bring in one of our horizontal rays, okay? So I want to see a break of this attempted area. Technically speaking, once we've broken here, the move which brought us down to this low is there. So that is my new low. My new sort of like high section, which I want to break to confirm that we're continuing in an upward trend on top of, you know, the 200. So as soon as we got the break of this, which was the move which brought us to the new low here, which was this candle, strong breakout, just indicates that we're still going to continue up, okay? So as soon as I've locked in profit behind a swing, so once that's been broken, I can start locking in profit behind swings, all right? As soon as I've done that, I can look to get involved in another trade. I just need to look for more order blocks as we go on. Okay, so what are we going to do? We are going to say that just because we're looking at it from this viewpoint, we're just going to mark out where the order blocks are, which we can see. We've got a push down, which was blocked, all right, it was rejected. It wasn't, you know, it's not the cleanest of order blocks, it's not my favorite, but still, it is one. That red one, 2 down here. Just there. You could even say actually from that wick. So what do we have? Okay, so we've got that section breaking. We could essentially lock in, well, we're not locking in, but we can reduce our stop from 1% to maybe 0.75% as soon as this high's been broken. Let me move that over there. Okay, so we're already, you know, less than 1% risk locked in after a few minutes, maybe 20 minutes. We work our way up. Price comes down a bit, it starts messing around, it starts creating these like little mini order blocks, I suppose. Once this high area is broken, we can then say that this is where we can lock in our profits. So we lock in just behind here. A little tip for you as well is that if we lock in exactly behind there, that's 1.1 pip, yeah, so it's not much at all. Now what I tend to do, just to make up for spreads, is I tend to be like just a couple of pipettes behind, so 0.2. But when it's following price up, I don't do any because your spreads don't work in that way. The spreads work up for the buy. So when trailing upwards, I trail exactly on the line. When trailing downwards, I give it maybe 0.3 of a pip as movement, because quite often on the way up, price will come up to a line like this. It will just come up to the line, touch it, and then just shoot off in the other direction. The problem is you get tagged in or tagged out based on the spread, which would be usually less than half a pip. Even during the Asian session, if you're using like a broker like who I use, which is pretty much a raw ECN spread, or if you're using like an FTMO account, it's less than half a pip. So you just want to make sure that you're trailing by the width of your spread, essentially. So what we're doing, we've worked out that we've got another order block here. As soon as this high is broken, we can move in our profits behind here as well. So profits get locked in there. We're already, we're not long into the session. And as soon as that high's been broken, we're an hour and 22 minutes in. We are locked in 1.63%, which is okay. It's profit, you know, and it's locked in. You're not going to be going home with less than that, unless you have a couple of losses in a row. Now, what are we looking for? Price to come up, come down, show us some sort of rejection off of this block of orders around here. But not just that, we're going to use the stochastic as the indicator for us to say, yeah, do we want to get involved or not? Well, none of this, nothing yet, just watching the stochastic. 6 and 20, not there. 10 and 11, maybe. There, 18 and 12, no. 18 and 16, 20 and 19, almost. But what's happened on that red candle, okay? So 20 and 19, it has tapped, literally tapped that order block, okay? Now, the reason why we're not getting involved just on a pending order right here is that what if price just continued straight down? It definitely could do, okay? It definitely could, and that's what I was doing on the previous, like my version of the strategy, but I was getting stopped out far too often. Okay, now what I'm doing with this is it's basically giving me a confirmation that at the end of this blue candle, this next candle, the stochastic's gone from 20 and 19, which is almost there. You know, we get a huge engulfing blue candle in comparison to the red one, in terms of the real body of the candle, not the wick. But 33 and 24, we are well back within the range, which means that price should start moving up again. Not always, but it should. So what can we do at the end of that blue candle? Well, we're already in a trade, which is good. We're locked in profit, which means that we can now look at getting involved in our next trade, okay? So we put in our stop loss of 3 pips, which sounds mental, but when you're a scalper, I wish that I could do it with less than 3 pips. I'd like just 1.5 pips half the time. So what do we do here? So price is working our way up. We wanted to see a break of this high before we could lock in any profits. So essentially with this second trade, okay, so as soon as this had been broken by this blue candle here, once that blue candle had broken this high, it meant that we could lock in profits of this first trade. This first trade can go from 1.5% to 2.25%. So that's 2.25% locked in now, which is good. And this one, instead of it being a full like 1% or 2% risk, you're now risking half because you've basically moved the stop loss to halfway, right? So that's pretty good. So you've got basically call it 2.25% on there, because I use 1% risk. So 2.25% there, and you're risking 0.5% there. So the worst case scenario is you're going to have 1.75% as a profit for the day. So we're working our way up. And bear in mind, it's quite difficult, you know, where I said that sometimes it's better for some people just to take a 1 to 3 or a 1 to 4, because with these trades, clearly, this would make the 1 to 3 and that one would make a 1 to 3. There you go, it's already made the 3. You know, that's made more than 3. But currently, what we're doing is, you know, we've locked in there on the first trade, but by the time you get up to this peak here, this second trade is already running at nearly 4%. And this first trade is running at 6.67. So together, it's over 10%. If you're doing an FTMO challenge, that is your challenge finished. You know, you just need to then do your other 9 days of trading. That is your challenge finished. And that would have taken you a grand total of 1 hour and 40 minutes. Okay, I got fairly lucky with my challenge, and I hit a day like this. And I finished it in like 7 minutes. All right, so I got something like $23,000 in one trade. It took like 7 minutes. Crazy, but hey, you know, you can get lucky. Some days you won't get moves like this, and sometimes you also have to accept that you may see the highest equity in your account at a stage like this, and you just can't take it because you get knocked out the market further in. But if you don't like taking losses like that, or if you don't like seeing these overextended numbers, just take your profits at 1 to 3 or 1 to 4, because you will get them. You know, if you get a good break of structure from a flat spread hours section like this, or session like this, you're most likely going to have a strong run into the Asian session. Okay, so let's keep going. All right, so let's move these back to where it should be, just to make it a little bit more realistic. And as I've said before, we're going to get rid of old used order blocks. Okay, because we want to keep our chart relatively clean, because when you're trying to think fast on a 1 minute, the less on your screen, the better. Okay, so I'm going to get rid of that as well. And this order block, I'm going to keep on there because it's still valid. Price could always come back to it and react to it. You know, it could be this whole zone here. Realistically, it probably is, but I prefer the last candle if I can have it. Okay, so what's doing? Price is coming up. I'm going to use this as my indicator, actually. So price is coming up. It's coming down. Bear in mind, our stop loss is down here. So price is coming down. We're now waiting for a break of this high up here before we can lock anything else in. When do we get that break? We get that break all the way over here on this blue candle. Now, have we had any other order blocks? Don't know how else to say this. Penetrated? Purged, that's the word. Right, not penetrated. I've got too much stuff on my mind. So no, we haven't had any order blocks purged. Alright, but what have we got here? We've now got potential order blocks being made. Definitely down here. This one not, because there was like a double, and what I find with these is that they just don't hold. Here could potentially be an order block. This whole section really. Yeah, as you can see, it doesn't really work, but hey. But yeah, we put that on the chart, but we wait for the time being, and the reason for that is you can see what is about to happen, can't you? Alright, so we've got the break of this. Where do we move our stops? Okay, where do we move our stops? Or, you know, lock in our profits at least. Well, we move it behind the nearest swing. Alright, so that's been broken. We move behind the nearest swing, which is currently here. That's not necessarily a swing down, it's not a reverse trend. We move that there, so we are literally 1 to 3 on this one. And with our first trade, we are on 5.8, so we are 8.8% locked in at the moment. So that's locked in profits. We're not going home with less than that, which is awesome. Okay, so we have that. As soon as price breaks this bit, which it does right there, we can now lock in profits behind here. Okay, and we do. So just a few minutes later, we get to lock in behind that, and then behind that. So what do we have here? So our second trade, instead of it being at 3, it's at 4. And the first one is at 6.8. So that is 10.8%. Okay, no losses so far. So guys, you might be able to tell that my hair is a little bit different. My shirt is very slightly different. And today is a different day. So when I was editing the video, the last part was actually corrupted. So the file was broken. And I'm having to do this last bit again, but I just want to summarize it for you. And I also just want to make sure that you don't think that this strategy is amazing in terms of it doesn't get any losers, because it does. And I'm going to show you that in a second. But generally speaking, the whole purpose behind it is to try and make sure that the stochastic is doing the majority of the thinking for me. So we're going to jump in. So with this day, which we just went through a minute ago, effectively for you guys, it came up to around about 10.5% in a session, which took about 2 hours, which is fantastic. Now I want to show you a couple of examples as to where the stochastic does the thinking for you for the next day, for example. So up here, even though we've got basically the recipe for what looks like a really good trade, we've got price coming down, a nice rejection off the exponential moving average off the 200. We've got the stochastic just poking its nose just below the 20 and then back in, but because they're also creating a perfect rejection looking candle with this blue one here. The thing is that we haven't had that strong break of structure. So I've just drawn basic structure lines here, and it's just right in the middle of the range. You're basically gambling at that point. So there's no break of structure. You know, without having that rule in there, so the break of structure, you would have a -1%, so you would have a loss for the evening. Now, you'd be waiting for quite a while because you're only looking at where the order blocks are, as well as price poking out the top of the 80, because we're below the 200, and you finally get an opportunity at about 3:30 in the morning. Now, this is literally just the very next day, and this is a losing trade, okay? So you still get a order block entry, and the order block is literally just kissed. So a very, very small order block, and we just get a tap. Literally a tap from this candle here. Now, if you look down at the stochastic again, and we look at the figures, we've got 83.90 and then 52.77. Now, that will only become 52.77 after that candle closes. So this larger red candle, once that closes, you can get short in the market. So technically speaking, it's the very next candle where you place your trade. Personal recommendation, which I do, is I try to place the trade about a second before the end of the minute, because spreads tend to widen just by 0.1 or 0.2 of a pip, but it still makes a little bit of a difference to your account at the end of the day, because you're using like 3 pip stops. But this one, in this instance, wouldn't have won anything for us. I wouldn't even class this as a mini pullback here. This would just be a -1% potentially here. Yeah, actually, you know what? It's not a -1% in total, because you do have a very, very minor pullback here. So what would this be? 0.2% loss. So that's a 0.2% loss. It's not too bad. Minus 0.2%. It's 0.16, I think, is the actual figure. But you know, when you add your commissions and stuff, it's about 0.2. So a 0.2% loss. And then we're going to go into the next day as well, which I can't remember if I marked out as win or loss. But I just wanted to show you a little bit of transparency that it doesn't win every single trade. It's not one of these magic, you know, works under any circumstance sort of strategy that I've sort of created. You do get some frustrating days. And yeah, in this instance, what did we get? We got our nice break of structure of the spread hours. So the nice break of structure here. So we're definitely moving in a downtrend. We can see that confirmation through the moving average. And we get 2 trades. So we've got one here, which is an order block break of here. We get the sort of the purging of it, and we get involved to go short because we've got the break of the stochastic going above the 80. We go short, and it's essentially break even because we get we put our stop loss behind the nearest swing, which is just there, and 0.27 is basically going to be your commissions. Now the next trade comes up really quickly just after that, and we do get that initial order block which we noticed right here. We get an entry perfectly right there, very quickly. Yeah, about 20 minutes after, we get involved straight away as soon as we can. A very small red candle, get involved straight there, and we get a 1%. Okay, so still that's 1% trade, and at most out of that whole section there, you could have had, you know, about 2%. But this is what I was saying before near the start of the video, where sometimes you need to just say like, right, I'm happy if I get a 2 to 1 or 3 to 1 or 4 to 1, because you're going to be racking up those wins a lot quicker. Whereas I tend to do it behind the nearest swing, because I statistically, according to all my back testing and actually my spreadsheets as well, where it's from live trades, I tend to get a bigger percentage. Even though the win rate and the strike rate is smaller, I get a much higher percentage because I'm following those bigger trends. When they start running, they just really do run, like what we saw in the first example. But I just wanted to give you guys that as a little bit more transparency as well on the strategy, that it's not a be all and end all winner, you know, outright 100% strategy, because there isn't such thing out there. But again, I apologize that the video just kind of screwed up while I was editing, so this is going to be out a couple of days late as well. But anyway, that's the end. Happy trading.